any response you need from my side, please let me know. Okay. This is June 13th. Is it right? Now what they said, we'll come to this. Tomorrow morning today I have sent this letter. They send this one to you. Is it right? Explain the concept of materiality and performance materiality in accordance with ISA 320. Okay, we'll do this. Then we'll do. And what they are asking is, calculate 5 ratios both years which would assist the auditor senior in planning the audit, and using the information provided and the ratios calculated, identify and describe 5 audit risk and response for each on the planning the audit of Kangaroo Constructions Company. Is it right? This has
Sir?
been, yes.
This is which question? Number of the question.
Sabar. Third, question number 3.
Okay.
Okay. Question number 3. Question number 3, I will just hold it out. I will do question number 3B. Okay. Okay. Question number 3. What is the date today? Date is 26th. Is it? What this? You see, when we are doing like this, they ask you to calculate the ratios. Is that which ratios they are telling us indirectly? They will give some indications. Is it right? Those ratios we have to make it. And what they are doing, we have to make it. The things is profit before tax and sales. Is it right? Focus on that. It will be easy for us. Okay. You are a audit senior of Rhino and Company, and you are planning an audit for Kangaroo Construction for the year ended 31st December. Kangaroo specialized in building houses and provides a 5-year building warranty to his customer. Your audit manager has held a planning meeting with the finance director and provided you with the financial instrument. Fine, okay. Knowing the entity. Kangaroo has a difficult year. House prices are fallen. As a result, revenue has dropped. Same. You can sense that. Okay. Only thing is, situation is different. Otherwise, the flow is same. The revenue has dropped. In order to address, the management has offered significant extended credit terms to the customers. However, demand has fallen and there was some completed houses in inventory where the selling price may be below cost. Is it right? IAS 2. Is it right? IAS 2. Inventory. Receivables. Is it right? Receivables. During the, is it right? Apart from that, you can, is it receivable. During the year, while calculating depreciation, director extended the lives of plant and machinery from 3 years to 5 years. Is it right? 3 years now, almost 3. When what will happen when there is a extension of the life? Is it right? Depreciation will decrease and profits will increase. Is it right? Operating profit. Okay, operating profit. This has reduced in annual depreciation charge. Depreciation charge has been decreased. The directors need to meet a target profit before interest and tax of 5 million in order to pay the annual bonus. Fine. Next, profit before tax. Where we are going to use profit before tax, we are talking in terms of return on capital employed. Profit before tax divided by capital employed. Automatically it should reflect which ratio we have to use. Is it right? In addition to try to improve profits, Kangaroo changed their main material supplier to a cheaper supplier alternative. Is it right? This has resulted customer claiming on their building warranties for extensive repairs. Is it right? To help with operating cash flow, the director borrowed 1 million from the bank. Is it right? This is for repayment for how much? 2003. Is it right? We are talking in terms of what? Leverage ratio. Just I am putting it. I am not seeing the. I don't know. I have not seen the answer. Okay. Is it right? Now. Again, we say we are talking in terms of what? We are taking in terms of receivables, extended credit terms. They are talking in terms of inventory. Is it right? We can say cost of goods or cost of receivables, payables. Is that receivables, payables, inventory, operating profit, return on capital employed? Is that we have a lot of things? Is that depreciation is nothing but yes, operating profit is there? Is that they are talking in terms of calculation of depreciation? The depreciation charge has been changed. The directors need to meet a target profit before interest and tax of how much? 0.5 million in order to their annual bonus. In addition, try to improve profits. Kangaroo changed the main material supplier to the cheaper alternative. This has resulted in some customers claiming for the building warranties. To help the operating cash flow, they borrowed 1 million from the bank during the year. This is to be repaid with see the things. 2013, is it right? This is due for repayment at the end of 2013. At the end of 2013 means it is going to be repaid by December. When we are preparing for, we have the information on 31st March. Okay, 31st March. Clearly look into, first you have to identify the sources. Okay, first you have to identify the sources. They are talking about the housing, is it right? They are talking about the housing, they are talking about the warranty also. Warranty to its customers. The directors need to meet a target profit before taxation in order to see what is the audit risk. Now you just imagine inherent risk, control risk, and sampling risk. Is it right? Deduction risk. Okay, that is the first thing. These are the basic things. Now what happens? They are reducing the, in order to this significant, they are extending. Is it right? They are extending the credit terms. Is it right? They are extending the credit terms. Is it right? Credit terms. Once you are extending the credit terms, definitely what will happen? The receivables. What is the audit risk? Audit risk is you are recoverables, the receivables will get impacted. Is that the receivables turnover days will increase? What is the audit response? Audit response is whether they are giving credit to the approved list of the buyers. Is it right? Approved list of the buyers, and it has been authorized by the management. Okay. Next, they have changed the cheaper supply alternative. Is it right? They have changed their material to a cheaper alternative. That is the audit risk. The risk is if you are changing the material to the cheaper alternative, definitely there will be more issues related to the finished product. What is the audit response? Audit response is that whether this has been recognized, this has been approved. If it is not been approved, you have to discuss with the management on what basis we have selected a cheaper material. Is it right? Next, what is another one? It is also audit risk. Is it right? They have changed the number of years, life of the years from 3 to 5. If they have changed the number of years 3 to 5, is The audit risk is it is going to have impact on the profits. Is it right? It will have impact on the profits. It will have impact on the efficiency. Is it right? We have to discuss with the management that whether this has been approved as per the requirement, or how it is going to be negotiated, how it is going to be evaluated over a period of time. Is it right? That is why we have to just maneuver the things. Coming to that, they have given you what? They have given you the things. Now, from this, how many ratios we can calculate? You have to tell me fast. Okay? You have to tell me. We can calculate what? We can calculate gross profit ratio. We can calculate net profit ratio. We can calculate current ratio. We can calculate quick ratio. We can calculate receivables. We can calculate payables. Is that right? We can calculate payables. We cannot calculate a loan. Equity is not there. Is that right? Equity is not the inventory, receivables, cash, trade payables, loans. Is it right? Next, gross profit is there, net profit is there. We can calculate operating expenses ratio. Is it right? We can calculate operating expenses ratio. Still you have searched. Is it right? If there is anything, is a loan, trade payables, cash, receivables, inventory, PBIT, operating expenses, gross profit, cost of goods, source of sales, revenue. Okay. Now we have to make sure that we will get our results from here. Okay. Is it possible or not? Is it right? What they say, calculate 5 ratios for both years, which would assist in audit senior in plan. Means 5 ratios, 5 into 2, 10 ratios, 5 marks. Is it? For each audit risk for 1 mark, and for each audit response 1 mark. Total it comes to 15 marks. Okay? 1 minute. What they have calculated, see, first, that is the most important thing. Is it right? First we have to identify. Where is that? First you have to identify. Is it right? Within the source. Is it right? Within the source we have identified gross profit, net profit, current ratio, quick ratio, receivables, payables, and operating expenses. Is that? Now based on that, is that what they have mentioned? They have what they have done. They have calculated gross profit margin. Is that? They have calculated operating margin. Is that? They have calculated operating margin. They have calculated inventory number of days. Is that? They have calculated inventory turnover. Is it right? Inventory turnover. They have calculated receivables. They have calculated receivables. They have calculated current ratio. They have calculated payables. And they have calculated quick ratio also. Is it? They have calculated. Is it? 1, 2, 1, 2, 3, 4, 5, 6, 7. Is it right? Now. Is it right? Now. Gross profit. How much is there? See, I will write for you. Gross profit divided by sales times 100. Okay. Gross profit divided by sales. How much is there? 44%, 44% and 46%. 46.7%. Is it right? 46.7%. This is 2013. This is 2012. Is it right? What happened? Gross profit has been deduced. Is it? Because of what are the reasons? See, you have used cheaper materials. Is it right? You have used cheaper materials. Is it? When you have used cheaper material, definitely cost of inventory will decrease. Is it right? Next, operating profit margin. Is it right? Operating profit. Operating profit margin is nothing but profit before interest and tax divided by sales into 100. Okay, sales into 100. Fine. Next, inventory days. Is it? Cost of sales divided by inventory into 365. Is it right? Inventory turnover. Is it? Inventory turnover. Inventory turnover. Inventory turnover is inventory divided by cost of sales times. Okay, inventory divided by cost of sales, it will be in times. Okay, current ratio, current assets divided by current liabilities. Is it right? Receivables turnover days. Is it right? Receivables divided by sales. Is it right? Receivable into 365. Is that receivables divided by sales? 1 minute. Receivables divided by sales. Okay. Next. Payables divided by cost of sales. Is it right? Is it payables? Payables divided by cost of sales. Is it payable into 365 into 365. Current quick ratio is current assets minus inventory divided by current liabilities. Okay. Now just I want to make sure. Okay, this is with what? This is 1. Is it? This is 2. This is 3. This is 4. This is 5. This is 6. This is 7. Okay. No. Okay. Fine. Operating profit is how much? Operating profit margin is 4%. 4% and 4% and 12.7%. Is it right? 4% and 12.7%. Fine. Next, operating profit. Inventory in terms of days. Is it right? Inventory in terms of days. How much? 99 and 64. Okay, 99 and 64. Inventory in terms of times. Is that inventory in terms of times? Is it right? Inventory in terms of time. 3.7 and 5.7. Payables. Is it right? Payables days. Is it payable days? 83.55. 83.55. Is it receivables? Receivables 91.49. Current ratio, quick ratio. Is it right? Current ratio is how much? 4.4, 2.2, 4.4. Okay. Quick ratio 1.5, 3.3. Okay. Now.
Mr.
Yes.
Are you sure between the payable and receivable days?
This is receivables. This is payables. One minute. Payables are what? 1.6 divided by 7. Is it right? 1.6 divided by 7. 1.2 divided by 8. Is it right? 1.6. How much is payables? See. 1.6. 1.6. 1.6, 1.2. Okay. Receivables are how much? 3.1, 2.0. Is it okay? Yes, Faiza. Receivables how much? 3.1, 2.0. Is it 3.1, 2. Just write down receivables 3.1, 2.0. Payables 1.6, 1.2. Revenue 12.5, 15. Sales 7 and 8. Here, receivables how much? Receivables 3.1, 2.0. Is it right? 3.1. Payables are how much? 1.6 and 1.2.
Okay, good.
Okay? Check again. Nothing will happen. We do not want to rush. Are you clear about this now? Is it okay?
Yes. Yes, it's okay.
Yes. Now, see, generally speaking, okay. See, when they have given you a similar type of question, definitely it will not be any positive results will be there. Okay. No positive. Never expect current year will always have impact. your gross profit reduced, your operating profit reduced, your inventory days has been increased, inventory turnover has been reduced, is it right? Inventory turnover times has been reduced, payables has been increased, receivables has been increased, current ratio is decreased, quick ratio is decreased. You take any sign where you will find in positive terms. No way. It is not only this problem related to this. Any problem related to this type of calculations will always have the same trend. Fine. That's very, very important. Now, what we have to do, we have to take the, see, if you go by numbers, okay, it will be easy for you. Okay, what is the risk? Risk is if you are giving a credit or if you are extending the credit and receivable number of days are increasing, is it? Receivables number of days are increasing, definitely, is it right? There will be increased risk of recoverability. Okay, see, receivables days has been increased from 49 to 91 days, and management has significantly extended the credit terms given to customers. This leads to increased risk in recoverability of the receivables as they have been overvalued. Now, what is the response? Extended post-year end cash receipts testing and review whether there is any aged receivables ledger. Means you, what auditor has to do? Auditor, we have done this, aged receivables. These are the standard wordings we are using. Aged receivables. Means you see what are the, it is somebody is there. Is there somebody is there who is going to beyond, they are not paid even after 91 days. We don't want all those things. We want to know what the response, the auditor has to extend post year end cash receipts, is it? And review any aged receivables to be performed for valuation. Is it right? That is the first response. Okay. One. Next. What they say? They say that due to fall in demand, there are some houses where selling price was below cost. Is that selling price was below cost? See, what is the rule of IS? Net realizable value or lower the cost. We should not sell the, what is the risk? If the risk is if you are selling the inventory below the lower cost, it is not acceptable. Is it right? It is not acceptable. That's what it says. Is it right? Means it is not acceptable. Due to fall in demand, Kangaroo, what they have done, we have to write that. Due to fall in demand, they have some houses which are selling below the cost. Rule says that, rule we have to apply. IS2 says that it should be stated at lower the cost or net realizable value. Apart from that. Okay, that is first risk. Second risk, what they are doing? Inventory turnover has been increased from 64 days to, previously they used to sell within 64 days. Now inventory has been taken how many days? 99 days. Now inventory turnover has been fallen from where? From 5.7 to 3.7. Now see, one side you are not selling it on time, and the number of days has been increased, and the similarly you can write only one. No need to write two. Okay, don't waste time. You need to write only one. That the inventory number of days has been increased from 64 to 99 days. There is a risk. We have to write there is a risk that inventory is overvalued. Because of that, what happens? Definitely the value of the inventory will have its impact. What you are doing, what the auditor will do, auditor will go into a details, is it right? Go into the details. They will say whether whether the inventory has been valued at the cost or net realizable value. Is it right? Detailed cost and net realizable testing they will do. And definitely what's happening, the inventory has been increased. Aged inventory, old inventory, is that? Aged inventory is nothing but old inventory report to be reviewed. Means whether you have anything which has been not sold, is it right? Anything which has been, see what is the inventory? That is the second stage. I am not discussing that. The second point, what is the background of understanding is that LIFO, FIFO will come. Is it? That is the valuation. Is that is the way we are going to value the inventory. Now, maybe they have used LIFO, they have used FIFO, whatever is made. That is not the answer in the picture. Okay, never at all. But that has to be in the mind. Is it right? That has to be in the mind, that detailed cost or net realizable value testing to be performed. Is that you have to go in detail whether really it has been, that is the response you are doing. What is the response you are going to do with this risk? And if there is any aged receivables, we have to review it. Is it? Whether we have to, if any, definitely, see what happens, see the thing. If there is any aged receivables, they may be, see you, what you are doing, you are giving discounts, you are giving discounts, you are doing some offers will be there, is it right? By discounts and offers, definitely, is there any discounts or offers? Because of that, the value of the inventory has been decreased, is it right? This is the response. First, you have to know that they have been reduced the cost of the inventory below the lower the cost of net realizable value. The inventory number of days has been increased. Okay, take one, detailed cost of net realizable value, and subsequently we have to perform the aged inventory report to be reviewed, whether is there anything is there with respect to writing down. Is it okay? Next, the directors is another question. Is it right? The directors, what they have done, directors have reduced the years from 3 to 5, resulting in the depreciation reducing. IS 16 property and useful life to be reviewed annually, and if assets life have genuinely increased, then the change should be reasonable. You cannot do as per your wish and will. Is it right? However, there is a risk that reduction has occurred in order to achieve profit targets. To increase the profits, is it right? To increase the profits, you have extended the life of the asset. What will happen? Immediately the depreciation amount will decrease. The depreciation amount decreases, the profits will increase. The depreciation amount decreases, the profit will increase. Is right? This is what it says. If it is done, if there is a rule, you have to review it annually. If that is really genuinely the assets life has been increased, then this charge is reasonable. But only to achieve the target of the profits, we should not extend the life of the asset. What they say, this is what I told you. Discuss with the directors the rationale for extending the useful life. Also, 5-year life should be compared how often the asset should be replaced. Is that means you have to discuss with the directors what is the rationale, what is the reasons behind changing the useful life. 5-year life should be compared to how often these assets are replaced. Definitely, it's not like we cannot every asset will have a useful life. Is that 3 years we cannot extend 3 to 5. And this provides evidence of the useful life. Means you have to make sure that how often we are going to replace the assets, and is there any reasonable justification for extending. Is it right? Is there any reasonable justification for extending? Isn't it? That is the basic concept. Is it okay with you? Who are there? Other? Yes. Fatima, Faiza and Mahita. Fine. Is it clear?
Clear.
Next. What the third one? Is it? Be very specific, okay? What is the third one? The directors need to reach 5 million. See, you have to reach the target. Because you have to reach the target, we cannot window dressing. We cannot window dress the financial statements. Is it right? Why? See, another thing. Why they want to increase the profit? Because they want annual bonus. They are under pressure to manipulate the results. Is it right? Through judgments. They are not talking about the fact. They are talking about the judgment. Is it right? Now, throughout the audit, what we have to do, that's very, very simple. Is it? This is the audit risk. Is it? This is the audit risk and this is the audit response. Throughout the audit, the team will need to alert the risk and maintain professional skepticism. If there is any judgmental decisions, is it right? You have to review any. Why we are saying that it has to be the profits has to be reached at any cost. Okay, reach to anything. Now what happens when you are saying that it is a profit of 0.5 million? Is it right? Definitely, we will compare the profits with the current year. Is it right? We will compare the profit with the current year with the prior year. Is it right? We are comparing with. That's what I say. There will be need to carefully review decisions and compare with what? Compare with the prior years. Fine. If auditors still needs any further evidence, what they say, the written representation should be obtained from the management. For what? For the judgments. Is it? For any judgments. Is it? For any judgments, if they have taken any decisions they have taken, is it right? Any decisions they have taken, you have to take the written representation. Fine. Next. What it says is that, see the things. How many are there? Go by numbers. It will be easy for us. Is it right? This is the first one. One is first for the receivables. Second for the inventory. Third for the non-current assets. Is it? Third for the non-current assets. The fourth is for the profits. Is it? The fourth is for the profits. The fifth is what? They are saying that they are changing the supplier. Is it right? To get the product at the lower cost. Is it right? Due to change in material supply, the product quality of the products has been deteriorated, and this has led to claiming the warranties has been increased. Claims and increase. If the overall number of claiming of warranty is likely to increase, then the provision should also be higher. Is it? It means what happens if you have to estimate. Is it right? We have to estimate. If see, that is the message we are getting. Is it right? That is the message. If you are using the lower quality of material, it is audit risk. Is that? If you are using the lower quality of material, definitely there will be some issues with the product, and customers will will have a claim. Okay, if there is a claim, definitely we should make it a point that your warranty provision should also increases. The warranty provision should also increases. What they say, if the warranty provision has been non-increased, it means that we have understated the warranty. What is the audit response? Is it that? What is the audit response for? Review the level of warranty position in light to if the claims are increasing, definitely the provision should also be increased. Is that, or what is the audit? What the auditor has to do? Auditor has to do proportionately to the claims whether there is a sufficient provision is made or not. It's just whether they have what the sufficient provision has been made. Review the level of the warranty provision in light of what increased level of claims to confirm completeness of the provision. Fine. That's now. What is the sixth one? Is it right? Sixth one. We have the Kangaroo borrowed 1 million from the bank via short-term loan. The loan needs to be repaid in 2013. So should be disclosed as a current liability. Is that what has been mentioned there? Just we will go to that question once. It says that, is it right? It says that, where is that? Yeah. To help with the operating cash flow, here it has been given. Is it right? To help the directors borrowed 1 million loan from the bank during the year. This is due to the payment by 13. Is it right? Whether it, see, when it is during the year, it has to be repaid. This has to be a current liability. Here they have not mentioned anything. Is it right? Here they have not mentioned anything. They only mentioned that it has been borrowed 1 million from the bank during the year. Is it right? During the year. Now, subsequently on what we have to do? Is it? They say that Kangaroo has borrowed 1 million from the bank via short-term loan. This needs to be repaid in 2000. We have, see this, we have to get it from by default. Okay. If it is going to pay it within next 12 months, it is a current liability. Is it right? They have to say that whether it has been identified as a current liability or not. First, what we have to do? During the audit, the team would need to check whether 1 million loan has been received or not, first thing. In addition, disclosures for the loan has to be reviewed to ensure compliance with the accounting standards and legislation that it has been classified as current liability. Is that during the audit, the team would need to check that the 1 million loan finance. First, you have to know whether we have received or not. Once it has been received, it has to be disclosed as per the accounting standards. What are the accounting standards? If it is less than 1 year, it has to be shown as a current liability. In addition, is it right? In addition, they may have, Kangaroo may have given bank a charge over the assets as a security loan. There is a risk that the disclosure of any security is not complete. Is it? Now what happens? Definitely when they are when you are taking a loan of 1 million, definitely you will take the loan against some security. Is it right? Against some security, as a security for a loan. Is it right? In some assets as a security. There is a risk that you take it. There is nothing wrong. What is the risk is? What is the audit risk is? Whether there is a risk that the disclosure is complete or not complete. You have to disclose. That's all. Is it right? Whatever you are doing, fine. If you are disclosing it, it's okay. What is the response of the auditor? The loan correspondence should be reviewed. Whether any security has been given as a guarantee. And this bank should be circularized as part of the bank. Means you have to get a bank confirmation. Is that? You have to get a bank confirmation for this 1 million loan. Whether it is a current liability, any security is given. We are not writing, just for your explanation. Is that the loan correspondence should be reviewed to ascertain whether any security is given, and this should be circularized. Means it has to you have to send the confirmation process, and bank has to reply it. Is right? As part of bank confirmation. Fine. Now, what it says, the current and quick ratios decreased. Is it right? The current and quick ratios has been decreased. In addition, cash balances decrease over there. There is a fall of demand, and Kangaroo has taken a short-term loan. See the thing, current ratio has been decreased, quick ratio has been decreased, everything has been went. Is it right? Your cash balances has been decreased. Is it right? And you have taken a loan. Is it right? All these have been happening. If all this happens in multiple ways, definitely what is the issue? There will be a going concern. Is that? See the thing, multiple things are happening. There is a going concern test to be performed during the audit and discuss with the director to ensure that the going concern basis is reasonable. Is it? Means if you are having these many issues, is it right? If you are having these all issues are related to cash. Understand one? All issues are related to cash. Any issues related to cash, is that the cash balances has been decreased, the quick ratios has been went down, and they have taken a short-term loan, is it right? And it has to be repaid within 9 months. Okay, it has to be repaid before the end of the year. Is it right? Is it? If it all happening, definitely there is a going concern. You have to discuss with the directors that the going concern assumptions or going concern basis is reasonable. The team should discuss with the directors how we are going to pay loan. Is it right? How we are going to pay loan within the shorter time. Is it? Although all the ratios are above our minimum level, there is a significant decrease and along with the fall in both operating and gross profit margins. As well as increase in payables has been increased and evidence of going concern difficulties. Yeah, they have mentioned it in a very simple way. Is it right? Now, if you take out this, is that this is a general conclusion as such. Last one, is it right? This is a general observation. Fine. Now, again, from the beginning, what we have, they have done receivables, they have done inventory, they have done non-current assets, they have taken the annual bonus judgments, they have taken that's very important, they are talking about the warranties, they have taken into consideration the loan amount, and most importantly, they have taken the cash aspect. Is it? Again, I am just making what if it is receivables, you have to extend post year end receivable, aged receivables. If it is inventory, you have to, what is the response? You have to detail cost and net realizable value testing. Any aged inventory is there, or by anything reviewed by writing down the value of inventory. Fine. Third one, property and plant. They extended the life of the asset. It has to be done on an annual basis. It should not be done on a judgmental basis. Is it right? You have to discuss with the management the rationale behind extending the useful life. Is it right? And you have to compare with other assets. Is it one in isolation, or it is done for all the assets? Is it right? Next, they have said that is a 5 million target has to be achieved. For what? For nothing else. For to get the bonus. Is it right? If any judgmental decisions are there, we have to take the written representation from the management. Is it right? Any qualitative, take like that. Any qualitative any qualitative judgments, we have to take the written representation. And if the warranties or claims have been increased against the warranties, we have the audit risk is that the claims will be more, the provision will be less. What is the audit risk? The claims will be more, the provision will be less. What is the audit response? Audit response is that we have to review the level of warranty provisions, and we, as per the claims, we have to revise and increase the provision. Is it? So that it should be confirm the completeness. Next, you have taken the loan. When you have taken the loan, it is current liability. Is right? We have to we have taken the loan. If the loan is taken against any security or not, is it right? You have to disclose it. Very simple, is it right? Now, we have to correspondence with the bank, is it right? To ascertain, to know that whether any security has been given, and you have to get the bank confirmation letter also. The next one is the current ratio, quick ratio, cash, and the loan has been taken. It is a direct impact on the going concern. Is a detailed going concern testing should be performed and discuss with the management that the appropriate going concern assumptions or basis is reasonable, and how we are going to repay it back the 1 million loan. Just write down the things. I will also write, okay? By the end of the day, I should know which files I should send to you. Is it right? June, we have June 2013. Is it right? Questions and answers. There is January, there is one June 15 is there. Where is that? This we have done. Ethics you don't have any that much issue, is it right? Ethics, corporate governance. 1 minute, I'm just going through that. See it, write down that there, just you write down in your notes, December 2010, is it right? December 2010, question number 3B, we have done that? We have done 2013, is it? December 2010, is it? It is also the same thing, only the concepts is different. That's why it is repeated almost in the same way. December 2010, I've already sent this paper to you. 2010 question and 2010 answer. They are talking about internal auditors. Let me know, is it right? 1 minute. I'm just, I'm there, where it is there. December, June, 1 minute. We will not, we will go by one, okay? We'll go by one. Of the ethical threats, going concern, this is what we have done, is it? Same thing is repeated. You just imagine, is it? They have done the same thing. What is the 5 types of procedures for obtaining evidence? And for each procedure, do an example relevant property and plant. We'll do this, okay? We'll do this. Question, can we do this? Just let me know. Is that question number 4? 4A1, 4A2, 4A1, and required is B and C, B, C and D. We do this, okay? What is the 5 types of procedures? We will go by sequence. We will get it. We will trap the things which is missing. Is it right? We will. Now, what they say, is it right? What they say, they make it very clear. Is it right? Describe 5 types of procedures to obtain the evidence. Is it right? For each procedure, describe an example, relevant example with respect to what? Property, plant and equipment. Is it right? Property and plant and equipment. Now for 10 marks. Is that? What are the 5, what is the procedures to get audit evidence? Any idea? Is it right? See the things. Is it right? What is the procedure to get the audit evidence? The procedure to get audit evidence is we have to do inspection. Is it right? We have to do observations. Is it right? Getting the thing. Inspection, observation, analytical procedures, inquiry. Is it right? Analytical procedures, inquiry, recalculation. Yeah, to get the audit evidence, is it right? External confirmation and reperformance. better you write down, at least you write down audit, you write down the 5 different types of getting audit evidence. Write down on paper. It will be very easy to you remember. Is it right? It will be very easy to get remembered. Is that now? Is that inspection? We know we have good understanding. Okay. What we have to do is we have to make sure that how we are going to work it out with property, plant and equipment. That's very simple. Is that when we are talking about the property, plant and equipment, what first you have to write, see, first you have to write in the theory and then you have to support with the example. Understand my point? And make it sure inspection involves examining of what you are inspecting. You are inspecting the records. Is it right? You are inspecting the records. You are inspecting the documents. You are inspecting whether it is internal or whether it is in external. You are inspecting whether it is in a paper form or it is in electronic form. Is it? Or in the media form. You are inspecting in the physical examination of the asset. Inspection involves, okay? Inspection involves records or documents, internal or external, paper, electronic or media, or physical examination of an asset. Is it? This is the explanation of the evidence. What is what they are saying? They have given 2. We have to write only 1. Is that inspect a sample of capital items in the client side. Is it right? In the client, to ensure that they exist. They are in good condition. It is related to what? It is related to property, plant, good condition. And agree. With whom we have to agree? We have to agree with non-current asset register. Is that? You have to, means getting a point? Inspect a sample of capital items at the client side to ensure they exist, they are in good conditions, and they are agreeing with non-current assets register for a completeness. The second point they gave you, inspect capital expenditure forms for evidence of authorization by responsible official. Means they are talking about the documents. Is it right? They are talking about the document. Is that you? It's up to you. I will take the first one. Okay. I will take the first one. Next, observation. Observing the process. What is it right? Observing consists of a looking at a process or procedure. What is the definition of observation? There's something performed by others. Now, what is the observation? As simple as that. Observe the process of logging property, plant and equipment invoices in the system, ensuring that all have entered completely and accurately. Or is it right? Observe the process of physical confirmation of non-current assets undertaken by internal. You take first one only. Don't get confused. Okay. Don't see. Observe the process. Is that it is for property, plant and equipment, inventory. Is it right? Sometimes it is for the sales. Is it right? Only the wordings will change. The concept, situation will change. Okay. What we are doing, observation is how it is going to be done by. Observe the process of logging the property, plant and equipment invoices into the system, ensuring that all the invoices has been entered completely and accurately. Is that? See, when you are going to the examination, go with an open mind. Okay, go to the open mind, and first to understand this, then slowly you will build up the first 15-20 minutes. It will take time. That is the reason first 15 minutes you plan it. Don't think that you get the things, you start writing. Plan it, identify it, underline it as much as possible. Is that? You plan. Then once you have got good content, then you think, organize your work. First you organize, then you start doing it. Next one. What they say? Analytical procedures. What is the analytical procedures? Analytical procedures is nothing but the moment you talk about analytical procedures, what are the additions, what are the deletions, what is the depreciation, what happened current year, what happened previous year. Analysis is what happened current year, what happened. Analytical procedures is a evaluation of financial performance through analysis. Plausible relationship. Plausible means comparing. Is that plausible means comparing? Is that comparing among both financial and non-financial data? What is the analytical? And also encompasses. Is that analytical investigation is necessary with respect to what? Fluctuations. This is very high end. Okay, fine. The relationship that are inconsistent with other relevant information differ from expected value of significant amount. See, analytical procedure is nothing but evaluation of financial performance through analysis. Is it right? From the current year to previous year to prior year. That's all. That is more than sufficient. Is it right? That is more than sufficient. Analytical procedure consists of evaluation of financial information through analysis of from current year to previous year. Is that fine? Next, what we are doing? What is the analytical procedure? Undertake. This is where that is more. That is one sentence is more than enough. Is it right? I am putting here in this way. Is it right? If you write this much, it makes sense. Is it? Now, what it says that undertake a proof of total calculation, depreciation, is right? Or additions or disposals. Compare it to the actual charge and investigate any significant differences. What they are saying, review monthly. Is that we have taken current year to prior year. They say that review monthly depreciation charges. Nobody will do monthly depreciation. Yearly depreciation charges. Is that review yearly depreciation charges to identify any significant fluctuations and discuss with the management. Is it? You can put like that. Okay. Any review any yearly depreciation charges. Inquiry. Inquiry means you are just putting pen on paper. You are asking. Is it right? What you are doing? Inquiry means you are seeking information. This is one type of getting audit evidence. Is it? From knowledgeable persons, both financial within the entity or outside the entity. Now, within the entity, I will go with the first one. Is it right? Discuss with the management whether there is any changes in the useful life or residual values of the assets, as it will have impact on depreciation. Is it? Discuss with the management any changes in the useful life or residual values of the assets, and it is going to have any impact, because any changes in the useful life, definitely it will have change in the amount of depreciation. Fine. Now or they say that go with one. Okay, I will just, the second point I am not stressing that much, just I am explaining you. Inquire the department head the process they follow with authorization of capital expenditure to ensure that the company has specified authorization process. Is it? Recalculation. Is it? When you are talking about the recalculation, it is nothing but we are talking in terms of what we will recalculate in terms of property, plant and equipment. We recalculate the casting. Is it right? We make it a point that casting is done. We calculate any we have added any assets, we have sold any assets. Is it right? We will recalculate that. Depreciation, we will recalculate it. Is it right? Where the recalculation is there, focus on those. Any disposals are there, we will recalculate again we recalculate to ensure that the accuracy with respect to the profits or losses. Depreciation, we will recalculate to make sure that the depreciation has been correctly calculated. Is it right? Recalculation is nothing but checking the mathematical accuracy. Recalculation can be performed manually or electronic. That is not that much, is that? The most important recalculation consists of checking the mathematical accuracy of documents or records. Recalculation the depreciation charge for a sample of assets. Is it? Recalculation a depreciation charge for a sample of assets and agree to the non-current register. Is it? And agree to the non-current register as such. Fine. Is it? Now, is it? How many things are there? What are the types of audit evidence? There is an inspection. Is that? There is an observation, there is an analytical procedure, inquiry, write down. On one separate paper, write down. On small yellow sheets will be there for your understanding. Is that short notes? Is it audit evidence? Is it audit evidence? Inspection, observation, analytical procedures, inquiry, recalculation, external confirmation. Is it right? External confirmation is if you want to know, is it right? If you have to, what is the first you have to know? Represents an audit evidence obtained by the auditor or direct return response. From whom? From the third party. In paper form, in any form, is it right? In paper, from the third party. Obtain a confirmation from the company bank. Very important, is it right? Because maybe you have taken a loan and you have purchased the property, plant and equipment. Is that? If that is the case, you have to get the bank confirmation that any non-current assets has held as a security for loans. If you are giving any security as a loan, it has to be disclosed in the financial statements. Is that the simplest way? Is that the first one is the simplest way? Obtain confirmation from the bank or of any non-current current assets held as a security, as this will require to be disclosed in the financial statements. Is it right? Now, re-performance, we are doing the re-performance for what? Re-performance in terms of, first we should know what is a re-performance. Yeah? Re-performance involves independent execution of procedures. Is it? Somebody has did, is it? Auditor will do on their own, is it right? Somebody has done, auditor will do it on their own, is it right? If that is the case, is it right? You have what they are doing, re-performing the non-current. You are doing what? You are doing again reconciliation. At the end of the things, is it right? You have to, if you see, remember this. At the end, in the end, sometimes what will happen in the examination, we will run sort of ideas. Okay, it will not click at that point of time. Is it right? It will not click at that point of time. In that case, is it right? In that case, the last one we have to think about disclosure in the financial. Before that, we have to have a written representation. Before that, we have to have a discuss with the management. 1, 2, 3, last three points. Just keep it as a we'll use. If you know about the 10 is there's a wild card. If nothing is happening, we can use these points. Is it right? If we are getting sufficient points, fine. If you are not getting sufficient points now, just keep these points in hold. It has to be disclosed in the financial statements. The last one, before that you have to get a written representations. Before that you have to get discussed with the management. Specific issues. Is it? 3 points, 3 marks always will be there 3 into 2, is right? 6 marks always will be there in your hands. Is right? Re-perform the non-current asset register reconciliation to the general ledger to ensure the accuracy. Yeah? Fine? Take it like this. Okay? These are the they ask us the 5 audit evidence we have done. They have mentioned 7: inspection, observation, analytical procedure, inquiry, reperformance, recalculation. Is that reperformance, recalculation, external confirmation? Is that external confirmation? How many? Reperformance, external confirmation, recalculation, inquiry, analytical procedure, observations, and inspection. 1, 2, 3, 4, 5, 6, 7. Just writing, okay? Because tomorrow, day after tomorrow, we will, okay? Next. We'll complete this. Is it right? I don't know. We have completed this. We have done this in the questions. No. What they are asking us, explain. Just send me in the group. I will again identify the questions related to audit evidence. You have sent 2 requests. Is it right? One is audit risk and audit response, and the second one is controls and test of controls. Okay. Explain what they are asking you is explain how the new internal audit department, Baby Bush Hotels, could assist the directors in preventing fraud and error. Describe the limitations of establishing and maintaining internal audit department. 3 marks and 2 marks. Okay, fine. And what is that? Describe additional functions other than fraud the directors of Bush Limited can do in the internal audit. Fine. What? Bush Baby Hotels company operates 11 hotels located across the country. Each hotel has bedrooms, restaurants, and this. Most visitors in the restaurants and leisure clubs are hotel guests. However, these facilities are open to public as well. Hotel guests generally charge any cost. We cannot charge any cost, is it right, to their room, but other visitors must make payment directly to the hotel staff. No, that is also not to be done. During the year, senior management noticed an increased level of cash discrepancies and inventory discrepancies, and they inspect that some employees have been stealing cash and goods from the hotel. They are keen to prevent this from recurring and considering establishing of a internal audit department to enter the see, internal audit department do everything. Internal audit department is not restricted only to is it right? Internal audit department is not restricted only to the fraud. Is it right? It has been related to each and everything. Is it right? They can do everything. Internal control, every other activity. There is no restrictions on internal audit. Okay. Explain how new internal audit department could assist the directors in preventing fraud and error. What are the limitations of establishing and maintaining internal audit? What are the limitations? Limitations are definitely the staff will not agree. Cost will increase. Is it right? Cost will increase. And when you are talking about what are the how the new internal audit department, they will have the controls. Is it right? They will put the controls on the price list. This is right. There will be a control on the cash management. Is it right? They will put control with respect to what? With respect to any frauds. Is it right? On the employees in the stealing of the cash and goods from the hotel as such. Fine. This is question number 3 4A. Is it right? Question number 4A. Who is responsible for all the things? See, it is not the internal auditor. It is the management who is responsible. Management has to initiate. Management has to work out the process of establishing internal audit department. Okay? Means the responsibility lies with the management. It is not with the internal audit. What we have to do? The directors of Bush Baby Limited, directors are responsible for the prevention and detection of the fraud. However, the new internal audit can help. It can only help the directors. Is that to in main areas in terms of fraud risk, advocacy, in terms of control systems, and developing control to mitigate any risk. Okay, see the things. The directors of Bush Baby is responsible for prevention and detection of the fraud. The internal audit department help the director by assessing the main areas of the fraud risk, and they have the adequate and effectiveness of they can only initiate the internal control systems. Is it right? To mitigate, to reduce the risk. Having developed the controls, they can undertake, internal audit department will undertake regular reviews of compliances. Is it right? Non-compliance with something which is not followed, is it not implemented, non-compliance, is it right, is identified, and if they need any training or something with respect to the reporting suspected frauds, if they find that there is a non-compliance, is that the staff is not following it, definitely what they will do, they will instigate further training if necessary. Means first they try to convince it. Okay, they want to make improvements. Internal audit department initially they will not take actions. Is it right? Internal audit department first they want to train the people, awareness about the things. If they don't, if things will not improve, they will report it to the senior management. Where fraud is suspected, where there is a fraud is suspected, they will undertake what? They will undertake detailed fraud investigation. Is it? Who is involved? How much is stolen? This is how much we have gathered the evidence, and whatever the further investigations. Even fraud is suspected, they will go to a detailed investigation. Get my point? Unless until they are not convinced, they will never get the sufficient evidence, they will not go for further investigation. What they say in addition, what the internal audit, once you have an internal audit, it is a deterrent. It is a fraud deterrent. Fraud deterrent means what? If internal audit is there, people will be little bit cautious. Is it right? If internal audit is there, fine, little bit cautious. So whatever you are doing, somebody is watching us. Is it right? That is what we call as a fraud deterrent. People will be little bit careful. As the risk of being discovered means individuals are less likely to undertake fraudulent activities. What are the 4 different points? One, they are asking 3 marks. Is it right? They are asking 3 marks. First, it is the directors who are responsible for the prevention and detection of the fraud. Internal audit department only helps them. Is it right? Help the directors in main areas of fraud. Is it right? And effectiveness of the control systems, so that they can mitigate the risk. Second, they will develop the controls and they review the controls. Is it? They develop the controls and they review the control. And if controls is not compliant, not followed, they will report this to the senior management. Third one, if fraud is detected, they will do a detailed investigation. Is it right? They will do if fraud is detected, they will do a detailed investigation. And if they gather sufficient evidence before they go for a subsequent investigation. What the internal audit will do? Because of the existence of an internal audit, is that because of the existence of an internal audit, people will be a little bit careful, deterrent. Is it right? People will be a little bit careful, and definitely there is in future the fraud will be less likely to undertake. Is it? What is the second point? They are talking about the limitations. Limitations, they gave you how many marks? Limitation, they gave you 2 marks. This we have done, is it right? This we have done extensively, is it right? What internal auditors are the employees of the company. So, this can impair, they cannot act with independence. The internal auditors of Bush Baby will be the employees of the company. It will impair their independence, and they may not report issues to those charged with governance for the fear of losing the job. This is very standard answer. Is it right? This is very standard answer. They are the employees of the company. They impair their independence. So they cannot report the issues to the people, to those who are charged with governance because of fear of losing their job. This is the first one. Although some internal auditors are professionally qualified, there is no requirement for to be qualified. No qualification is required. Is it right? That is one of the limitations of the internal audit. Is that external auditor? That there is a requirement, is that then there is a gap of experience and technical knowledge with respect to internal audit. Is it? Now, what is the third one? It is also very easy. Cost of internal audit can be significant. Yeah, cause hence people will, what we are saying, we are saying value for money. Is it right? We are talking about the value of money, economy, efficiency and effectiveness. Is it right? Economy, efficiency and effectiveness. Is it? The cost of internal audit department will be significant. Hence, prior to recruiting a team, the management should consider carefully the roles the team can perform, and it will generate sufficient value for money. Is it right? Now, what is the fourth one? Bush has not previously have any form of internal audit. There are some resistance from the employees. There will be some resistance. They will not feel comfortable. This is the old conventional type of answer. Is it right? This is the old conventional type. They are uncomfortable with the idea of their work being reviewed. Is it right? What are the limitations? Limitations of internal audit is, the first is, they are the employees of the company and they cannot work with independence. If they report anything, they have a chance of losing the jobs. Second one is, if there is no qualification for the internal auditor. Now, when I'm telling you this, I don't think so you need revision. Is it that the moment you think internal audit limitations, this voice should be there in your mind. Okay, there is no qualification with respect to internal auditor. Is it right? Because of that, there will be a gap in experience and technical knowledge. The third one is, the cost of internal audit department is very significant, and management should think carefully before they appoint internal audit team, and they will generate value for money. You have to write this. Understand point? The moment you come across something related to internal audit, write value for money audit. As there is no previous internal audit department, there will be some resistance from the employees of the company, because they have the fear in the mind. You can write in simple English. They can have fear in mind that they may be their work will be reviewed, and definitely they will, if there is anything fraud, they will do the investigations. What are the additional functions the internal auditor will do? See, it is a complete revision of internal audit. Understand why? It is a complete revision. External audit, internal audit, difference only we are not doing here. We are not doing only external audit and internal audit. Otherwise, we are completely covering the internal audit lecture here. What are the additional functions? Is that they monitor asset levels. Is that, see, internal could undertake inventory. Is that they do the inventory count. Is it right? Because internal audit could they do the inventory count. Is it? The internal audit department could undertake inventory count of the restaurants of 18 hotels. This is like, is it right? You see, I'm making it very, very clearly. Is it right? If there is likely to be a significant level of goods at each hotel, internal auditor could count actual levels held compared to the hotel records. See, why I am highlighting this is, this gives you an idea how much precise we have to be in examination. Internal audit can work out with cash control at hotels. Is that internal could undertake control testing over cash receipts and cash counts. Is that? This is the additional work internal auditor can do. One minute, I will stop. 1 minute, I will stop, okay? I will complete this and I will stop. 1 minute, I know. Is it? Yeah, I will complete this and stop. Is it? Now, internal auditor will also have this survey. Is it right? Customers satisfaction levels. Is it right? They will undertake the mystery surveys where they can enter as a hotel guest, stay in the night. They are talking about, in order to improve the overall guest experience of an internal could undertake mystery guest surveys. Okay. They also have overall review of financial or operational controls. The internal could review the controls at head office. They are talking about individual hotels, and they can make recommendations to the management. Fine. They also have a systems audit. Is it right? They can also have the systems audit. If any complex computer systems, is it? They have a relatively complex computer systems relating to the bills of the hotels to head office. Value for money review. Is it right? Value for money. The internal could be asked to assess whether it's obtaining value for money in areas such as capital expenditure. An internal audit will also do review with respect to regulatory compliance. Is it right? Internal auditor can do these audit. They can work. See, they can work with the monitoring assets level, controls, customer satisfaction. They are talking about operation and financial audits. They are talking in terms of systems audit, value for money, and